Very interesting afternoon here, especially after the iPhone 8 debut. What we're going to do is we're going to take a look at a Zero Hedge article really quick and kind of recap what has happened. And what we can do is we can place that in the tab here and just understand some of the items that we've seen in the debut of the iPhone 8. And what we saw was a run up in the stock before, and then right around that facial recognition malfunction, we saw the stock absolutely decline in a very big way. Some of the main takeaways here, basically Apple unveils the LTE enabled Apple Watch Series 3. We understand that. I actually have the Series 2. I think it's a worthless piece of technology. I just strapped it around my cat yesterday and it functioned better there, but I think it's quite worthless. But anyway, so we saw the Series 3 watch come out with cellular data around $400. That's a great thing. Many people were talking about the 4K resolution TV there with Apple TV. That's another interesting thing. Then it unveils the iPhone 8. You know, their iPhone or their exec on stage had a big malfunction when it came to the facial recognition. Stock absolutely tanks. We can see that here, and we'll go and take a look at that right now. So the stock is declining. It's off about 1%. Very big move to the downside. And what we need to take a look about Apple, it's in a parabolic move over the course of 7 to 8 years. Now, keep in mind the big move here, it's because of central bank balance sheets expanding. It's due in part to buybacks and just also good fundamental data that we've seen over the years on Apple, massive cash position, things of that sort. But we need to take a look technically and just understand that Apple is in a very, very powerful move, parabolic move. And what we're taking a look at is what's happening this month along with prior month. And what we see is a bearish piercing pattern from all-time highs. And what that signals to us is that there is exhaustion. And times like this, after a big parabolic move, and you see exhaustion, it makes you wonder, are we kind of repeating this early 2015 topping process, or perhaps a 2012 topping process? We need to be very careful to understand what is happening today and if we're going to see a reversal in the trend. Once again, we're very stretched here in consideration of pivots. You can see that price has blown through the R1, R2, R3. Very interesting that we see there. Elevated as far as a premium print to the 10 SMA, 20 SMA, and anything below that. Now let's take a look at the top right of the screen on the weekly time frame. And I think one of the items that we understand is that Warren Buffett was buying in this area. Now we understand that Warren Buffett, he is not the greatest picker when it comes to technology, and we know that with actually IBM in a very big way. And what we've seen here is a very, very large move over the course of, we'll call it about a year and a half. And we need to understand that Apple hit about an 89 or 90 handle right around the time that China released about $1 trillion in stimulus or more. That reflation narrative started coming in. Commodities went to the upside. The dollar was suppressed per se. We call that the Shanghai Accord in the early 1Q or first half of 16. You saw the reflation in global economies. Everything was awesome, and Apple soared almost 82%. Now we understand that Warren Buffett came in at this time. Now this is a very big linear move here. What we can line up Apple's move with is basically the G3 central bank balance sheet. And we understand that the Swiss National Bank has filings of absolutely buying large tech companies out there, the FANGs and anything of that sort. So we need to understand that these linear moves are not natural, and at some point we're going to see a very big reversion, an unfair high. Our question is that did we hit that unfair high today? And if we did, was it on the basis of the iPhone 8 malfunctioning in front of the world to see? That's the question we need to understand. And actually, it's not as much as the iPhone 8 malfunctioning, it's where we are in the cycle. We're almost 83% to the upside in this cycle. And you can see the declining of the participation rate here on the x-axis and even on the y-axis. So we need to understand is that the auction is running out of steam, but we also need to realize that central banks can print zeros and ones and buy these equities all day. And these companies can take out debt and have buybacks all day. So it's very interesting that we see that. And we also want to understand on a bigger basis or a bigger perspective is that non-financial debt out there is fairly high, and a lot of that is because of the dividends and or any sort of payout or buybacks or anything of that sort. So a lot of these companies are very leveraged, buying back their stock because it makes more sense these days to participate in the financialization or to participate in the financial economy rather than the real economy. You yield more there. But what we want to take a look at is the bottom left of the screen, and notice that the price action here has been somewhat of a bracket and very challenging times. Now, even though it hit new all-time highs to the 164, 165 level back in the latter parts of August, we need to understand this is somewhat of a bracket. And in this bracket, it's a big challenge between the buyers and sellers, and it's basically if we can force the next short cover, you'll get a big impulse to the upside. Otherwise, you'll see a reversal. That's what's happening right now, is that we're in a bracket, and within this bracket, we would want to use the pivot of a 158.98. That's the level we need to watch here, 158.98. And you break that level, what you would see is a very quick move down to the pivot, or excuse me, down to the S1 about 152.82. That is what we want to watch today. Apple is in a bracket, and the bracket is a pivot of a 158.98. We'll call it a spot 159, all the way up to about a 165.13 R1. So we're between a pivot and an R1. The iPhone 8 malfunctions. The conference is basically a dud at this point. We see a debut of a few new items, maybe some upgrades, pretty much upgrades I would say with the iWatch, having that ability to have cellular data, the 4K Apple TV. So it was nothing revolutionary like a car, nothing like that, nothing revolutionary today. Maybe the iPhone 8 has some very neat technologies, but they failed and did not work in the presentation, which is a big no-no there, especially of a company of this size. And you actually saw when that did occur, you saw Tech XLK just get smashed with Apple. And I'm assuming that XLK's basket there has a heavy weight of Apple. I mean, it's just common sense there. But anyways, what's the biggest takeaway? The biggest takeaway to end this broadcast is the understanding of the move. Where are we in the cycle? And in the largest of time frames, we are 82 to 83% up from where Warren Buffett was buying. And we need to understand that this is a distribution phase. This is a phase that you create narratives, and these narratives are to sucker in the retail. You distribute to the retail, and at some point, this will reverse. We will hit an unfair high. We're very, very stretched here. I mean, just take a look at the relative strength index on a 14 count on the monthly time frame, guys. This is big stuff. Every time that the RSI drops from an overbought range, you see a very big market clear, and we need to be very, very conscious about that. Look at this. The last time this happened was in the first quarter of 15. The time before that, it was in the third to fourth quarter of 2012. So we need to be concerned that we are repeating, and it is negatively diverging. You see the lower highs in the relative strength index. So we need to understand we're repeating a cycle that will eventually perhaps hit an unfair high. The question is, and being in this central bank driven, this G3 balance sheet of these central banks expanding to buy these tech companies and other financial vehicles out there, it's hard to get market timings. I mean, don't you wish that any of us could go out there, go into our game drawer, take out a few Monopoly bills, and go out and buy anything you want? You know, that is kind of the concept here with what central banks are doing. And at some point, the central banks will take a step back because they understand the wealth inequality that is being created, and it is at an extreme, and it is leading to political regime change around the world. And at some point, you would see a reversal. The question is, when you see that liquidity removed, what's going to happen to these stocks? What's going to happen to these markets? You're going to have liquidity gaps. You're going to have an auction that cannot support a high time frame. You're going to have an inside auction that cannot physically support high time frame selling, and we need to be very, very conscious about that. So this is Alistair Williamson from Baltimore. I hope you enjoyed the broadcast. Just be careful. iPhone 8 facial recognition basically malfunctions, stock at all-time high in an 83% advancement in a linear fashion. Is this the event, the market-generated event that will create the unfair high and start the reversion? That is the question, and that is the purpose of this broadcast.